Welcome back, everyone. Next, we have Core Group Holdings, Inc. It trades on the New York Stock Exchange under the symbol KORE and is a pioneer and leader and trusted advisor delivering mission-critical IoT solutions and services. Please welcome its president, CEO, and director, Romil Bahl. Nice to see you, Romil.
Hey, nice to see you, Anna. Thanks very much. Appreciate you guys having us. I'm going to click on to pause briefly on this disclaimers chart, just so that I could say I've done it, and then move on to a chart that says sort of company or core at a glance. As Anna said, we are a trusted advisor and enabler of end IoT solutions. What this means is that we have this wonderful diversified play, enabling really just about any use case in IoT. And if you know anything about IoT, you know that while the initial hype took a while to mature, this is now, we're into what I call the decade of IoT. There will be, in our estimation, some 75 to 80 billion connected devices and sensors out there by the end of this decade. The growth is already starting to really heat up. We as Core have been around for 20 years, had some of the kind of 2G, 3G sunset issues to deal with in terms of forced churn and some ARPU declines going into the long-term evolution, LTE, 4G, the first generation of it, 5G, 6G, but we've now emerged from all of that and are about to be sort of the growth story you'd expect us to be in a, hopefully well-run company in a fantastic industry with great tailwinds. With those introductory words, I'll just point to a few things on here. We are, again, an enabler. We're a one-stop shop to help a customer launch an IoT solution, whether you're in connected health, you're in fleet, you're managing remote clinical drug trials, you're in industrial IoT, you're in asset management, as logistics and tracking. We can help you with our core service, which we've been building for over 20 years in IoT connectivity, but also a series of managed services, device management services, and configuration services, and then a series of SaaS tools that make managing your deployment easy. So we talk about what we do is build, deploy, manage, and scale your IoT solution for you. How we do it is through a portfolio of IoT connectivity solutions and analytics services. I'll talk a little bit more about each of these services on the next slide. So if you're still sort of scratching your head a little bit saying, what do these guys really do? I promise you it's coming. Some of the numbers at the bottom are interesting, but look, we have more carrier integrations globally with top class carriers, not just the AT&T, Verizon, T-Mo that you know in the US, but really all over the world. If you know the carrier, we're probably connected to them, Vodafone, Telefonica, Telstra down in Australia, et cetera. So we can connect you anywhere in the world through one pane of glass. And even more excitingly now, can enable your solution with one SIM, which is the core eSIM, if you will. We call it OmniSIM. And we've also recently added through the Twilio acquisition, we bought Twilio's IoT unit, their version of a multi-IMSI-based eSIM, which is called Super SIM. So very exciting times for us here at Core. But let's get a little bit into these services themselves, right? So connectivity is our bread and butter. It's our core business. We've been around, again, over 20 years, building that significant amount of IP, carrier integrations, a world-class carrier management platform, and our Core One and Connectivity Pro is the name of our connectivity managed service specifically. IoT connectivity, as you can see, it's in the sort of mid-60s. It's dipped a little bit of late as we acquired Twilio. They were at lower margin than us, but we're committed to getting their gross margins back using our much better carrier economics to improve gross margins as we go. But it has two elements to it, right? CaaS and CaaS. So connectivity as a service is literally what it sounds like, right? You need to connect the device somewhere in the world. You want to use our portal to do it, or you want to get API. Everything we do is microservices, API front end, so it can go all the way into your own systems and feed you the data you need. That's our core business, beautiful, sticky business, high visibility. Once a customer starts deploying SIMs out there, those SIMs stay in place for 7, 8, 10 years. Frankly, nowadays it's going to 12 and 15 years as we're getting better at managing battery time. So 80% type recurring revenues, high visibility. I've never run a business with the kind of revenue visibility that connectivity gives us. Connectivity enablement is when a customer wants to use our IP on a, if you will, a license basis, right? Like a software license, to take more control of connectivity because it's critical to them, or more control of their core network, their cellular core network, which we can serve up as well. To make us the one-stop shop I referred to, we have over what we call Core 3.0, the phase that, an era that sort of I've been running these last 5 years, incubated and launched a series of, as I said, device management services, our Security Pro SaaS tool, our location-based services SaaS tool. Increasingly, it's becoming, ubiquitous sort of to all solutions to know the location of the device, to get intelligence and visibility to it through Security Pro, and those are per subscriber per month. Obviously, very high software SaaS-like gross margins in that space. The device management space is lower margin. That's where we've started. That's where the bulk of our revenue is. So our overall margins look low. But as we're launching more pre-configured solutions in that space, we're on a journey back up to 40% and then beyond as we get to EBITDA margins of 25% is our goal to get to that with economies of scale that we are building. So let's get a little bit more granular into the what do you do question. I want to start, though, by first of all just sort of killing the hype or killing the myth that says, oh, IoT is some fancy highfalutin thing, that needs rocket scientists to figure out and, that sort of thing. It's literally everyday stuff, right? From trucks and fleet and connected cars, where you could argue IoT started. The telematics world was the first real use case of IoT, all the way through now to remote patient monitoring. You see the connected blood sugar or continuous glucose monitors for diabetes patients, heart patients, on and on and on, down to basic pet tracking and smart metering and so on. Okay, the challenges that kept IoT back these last 10 and 15 years since the hype first started are sort of on the right-hand side, and I won't bore you, but reading to you all 7 of those key challenges. But suffice it to say, our strategy, is entirely premised on solving for those challenges, making it easier to deploy. The complexities, the average solution needed on average 18 partners. For one enterprise to launch one IoT solution needed an average of 18 partners. And we're committed to sort of that journey of getting you down to 1, maybe 2 or 3 to start, certainly the journey down to 1, across that fragmented ecosystem, building on a foundation of IoT security, of course, which is critical to all of us. So that's a little bit about IoT. Now, what does it take to actually deploy a solution? So we lovingly call this deployment framework our 7x7, because it has 7 major steps and 7 key deliverables in each of those steps. Starting from strategy, and as we like to say, design security in from the beginning, through to then picking your technologies based on what you're actually trying to get done, based on a business case and some POCs, hopefully. And then you get to step 3, which is connectivity. It's actually not some simple resell MVNO type model here. This is a complex mix of connectivity management, data management, and device management. Anywhere in the world, you're getting the data, you're encrypting it end to end, you're transporting it back, you're shipping it back up to a cloud or other place where your application is running, indeed maybe to your data warehouse as well. And that set of green things, which as you see at the bottom says Core does all of those things, obviously we've been building that for 20 years, is our bread and butter, and again is 70+% of our revenue. Steps 4, 5, and 6 are the logistics around the devices themselves, right? The forward logistics, getting them configured, getting them out there. The reverse logistics, when you need to replace one, and then all of the tools to help you manage, operate, and that's obviously critical to scalability. A lot of early failures happened in IoT because people underestimated the cost of keeping these things running, keeping them out there and so forth. And so we addressed those. And then that finally brings you to step 7, which is what most of our customers do the IoT for, is for the data to drive insights for something, right? So our largest customers in remote patient monitoring and fleet, I mean, what they really care about is the data. Where's my product, or how is this patient's heart rates doing, et cetera, so they can do something with that data and provide alerts back, right? Most people shouldn't care. Most of our customers shouldn't care about all the details and how many types of networks there are, and 3G and 4G and 5G, and when will 6G come, and when should I use cellular, satellite to go with cellular. And those are the things we solve for you, make it real easy for you to just deploy, get the data you need, get on with your business model. So we are pure B2B, right? We deploy the solutions on behalf of our customers. They do all the billing and all of that, whether they are themselves selling to end businesses as customers, or consumers as customers, or patients as customers. They take care of all of that. We just bill the business. Now let's go really deep into one use case to really hopefully make all of this come to life. This is our largest customer. It's in the cardiac rhythm monitoring space. So hopefully none of you will ever get one, but if you do get a pacemaker, the doc will suggest which pacemaker for you. The big 3 in this space, by the way, are Medtronic, Abbott Labs, and Boston Scientific, all 3 of whom are customers of Core. This is obviously one of those. So that pacemaker goes in, you get home, a box arrives. That obviously needs to be very, very easy, right? Sort of easy for an older person or a person that's not tech savvy to quickly adopt, which means that it has to pretty much work out of the box and connect via a short range protocol to the pacemaker in your heart, start to collect data. The way that data is backhauled, if you will, up to a highly secure health cloud of your choice is through our CAS service. So we ship this solution to 59 countries at last count. We collect data from 109 countries at last count, because obviously when people move, they take their pacemaker with them, right? So as you can imagine, every time the device goes through one of our health facilities in Europe or in the US, we configure it. By the way, those facilities are also a part of our competitive moat, because they need all these FDA registrations and HIPAA and other certifications, and to be compliant with all of that. GDPR, obviously, for Europe. So every time a device goes through us, obviously there's a nice sum of money, revenue to be gathered from our customers. And then the beauty is, once the device is out there, it works for X years and continues to throw off CAS revenue, the recurring revenue, forever. That number is actually up to over 1.25 million subscribers now. We've been serving this customer for 12 years. So you say, okay, now that makes sense. Now, what specifically out of that 7x7 chart you showed us, Romil, what are the things you do for this customer, right? And that's what this chart represents. It's the same 7x7 sort of grayed out. Everything in blue, though, that's kind of up near the front of this page is something Core does, okay? And so obviously, as you can imagine, for that bundle of services, we're talking a significantly different, much higher revenue model than just a simple ARPU P times Q model, which is in connectivity. So hopefully that's helped investors new to our story with what we do. A little bit about that market and those tailwinds that I talked about. By the way, there are analysts out there who will say much higher numbers than the 75 billion we put out for 2030. There's people saying 100, 120. We triage everything we're seeing and what's happening. We think that's the opportunity. And by the way, it's tremendous, right? From a world where IoT devices were sort of roughly half of all the devices out there, the other half being consumer devices, right? Personal laptops, smartphones. Well, we all know the growth of those things is limited. How many smartphones can a person buy, right? And there's whatever there are, 8 billion people in the world. There's a natural roof to how many smartphones and laptops are going to get out there. On the other hand, in IoT, there is no limit, right? There will be 10 sensors and devices per human being on the planet out there, and we're positioned brilliantly to take advantage of that, to simplify our customers. I mean, connected washing machines, connected fridges, connected lawnmowers. I mean, these are real things happening today. Everything wants to be connected. You want data off of it, you want intelligence off of it, and we're brilliantly positioned. Now, obviously, we focus, right? Because without focus, you won't know the customer's use case well and so forth. And so these exciting use cases are where we're focused in these 5 industry verticals. Our connected health, which is about 40% of our revenue, and fleet, north of 20% of our revenue, have matured to the stage of being global practices, global industry go-to-market practices. So, Brian Lubell, who's my sort of CEO of Connected Health, kind of runs his business, if you will, there. And then these other industries are smaller, they're slower to mature, but therefore have even higher CAGRs up ahead, obviously, as those industries adopt. And we will be constantly evaluating the market, seeing where the dollars flow, making sure we're sort of flowing to where the dollars are, right? So I'm getting to the end of my presentation. We've done a lot over the last 5 years in transforming ourselves from a connectivity provider to connectivity solutions analytics. But this is an evolving space that's getting more exciting all the time. And even as we mature our industry go-to-market, right, there's eSIM that's maturing. Estimates are that between 3 and 5 billion eSIMs will be shipped over the next 3 years, right, through 2026. We're one of the leaders in eSIM, and it's just really a game changer for IoT. And then AIoT is coming, right, where artificial intelligence and IoT come together. And that's obviously generative IoT or AI is driving a lot of myth right now, or hype phase right now, which is normal, right? But that will normalize and mature. And as it goes to work on real applications and so forth, it provides another growth engine for us. So between AI coming, eSIM, plenty of growth drivers as these sort of 75 billion devices get out there. So as I rumble towards the last 3 odd minutes of my formal speaking slot, this is sort of the last prepared page we had. We've got some pages in the appendix. I may point to them depending on the questions from the audience. But we are the only public IoT pure play company. Talked about those 80%, 85% recurring revenues. We're now accelerating our top line growth as the technology sunsets get behind us. We're now in a much more, a world of sort of a network of networks world where these networks work together much better. The carriers have learned their lessons from the trauma caused for our customers with sunsets of 2G, 3G. In the future, it's all backward compatible and not as much trauma. Obviously our balance sheet is now strong. We just went through a refinancing. One of the reasons that our stock's been depressed, apart from being a SPAC and needing to prove ourselves, was that we had first lien debt that was going current in December last year, a couple of months ago. So we got a refinancing done in November and have given ourselves 5 years. And we think in 2 or 3 years, we'll be a $100 million EBITDA company, up from kind of the high 50s this year. I've already talked about the fact that we're very diverse, right? I don't come to market as one IoT solution, right? There's great companies. Samsara is one in our industry that is trading at over 15 times revenue right now. But equally, it's one industry and one solution, and you better be the best to have that kind of long-term growth rate and success. For us, many unicorns will grow off of us because those kinds of companies are our customers, right? Very well positioned places like health, which to me is just a critical bet. I think healthcare spending is just going to continue to, go up and to the right, not just in this country, but globally. And a very strong IP-based competitive moat that makes us very, very differentiated, and really the only global, sort of the leading global connectivity provider. So right about on time, I think 19 minutes, Anna, if I've got that right. I'm ready for questions.
Great job. We do have some questions for you. Let's start with Lucille's question. She says, when you say you help launch, can you clarify, do you help develop or are you on the marketing growth side?
No, so we're not on the marketing side. We don't have any services. I don't have any consultants. I don't bill anything by the hour. We are the technology, the connectivity service underneath, right? So the example of the cardiac rhythm monitoring, for example, the hardware comes from a third-party manufacturer that manufactures the spec of our customer. We configure that hardware. We make sure it's got the right software, the right firmware, right? We'll insert a SIM based on where it's going. We can actually identify which carrier is the strongest, make sure it works, pick, pack, ship the thing off, and then manage the connectivity, manage the data transport layer back into the customer. So we're pure tech and services. We've built a very nicely profitable business on the backs of these network providers, the satellite providers and the telco cellular network guys, who obviously spend billions and billions of dollars of CapEx. We are a very light CapEx, high profitability business model.
Brad wants you to break down what a deal looks like. Do you get a fee? Is it monthly? Do you partner if you like that idea and take a percentage? How does it work?
Yeah, so the bread and butter deal is connectivity, right? And as it says here, the primary pricing on the right column is per subscriber per month for the lifetime of the device, right? So think ARPU, if you like that term, average revenue per unit, monthly price. We obviously can do all kinds of very interesting things for our customers. We can pool, we can optimize. We certainly optimize what we buy from carriers and consume, so we never pay overages back this way. But we may charge customers overages because they may say, hey, I want a 10 gig plan, and then go over that at times. So there's contributing, analytical optimization techniques and algorithms that we use to drive our gross margins into the 60s of percents. But that's the bulk of our business is per subscriber per month. Obviously, in the CaaS space, we may do more software license looking models. And then in the pure software SaaS space, subscriber per month, those are smaller businesses today. And then finally, in the device management space, it's an upfront fee based on what we're doing for the device. Now, having said that, even that's turning into more of a recurring type model, because a lot of our customers are saying, Romil, I don't want to pay $100 per device and another $100 for your services on that thing. Can you bill me that over 36 months or over 24 months? So take CapEx dollars and turn it into OpEx dollars for me, which we're obviously more than happy to do as well. Not that, Paul, our CFO, who's on, wants to be used as a bank per se, but if it makes it easier for the customer to consume, we're happy to do that as well. But those are the billing models on the right. I hope I answered that question, Brad.
I'm sure you did. Calvin Murphy wants to know, what is your post-launch strategy for these IoT solutions? What services are provided?
So again, the end solution to the end customer is owned by our customers, right? We can't be experts in thousands of use cases across tens of industry sectors, right? I mean, that's not our goal. As I sort of like to characterize our strategy, we're not one of the 49ers heading out to see if we can find the seam where there is gold, right? We're Levi's jeans. We want to sell the pickaxes and the tools, right? The most successful of those gold miners will grow. Those will be the unicorns in our business, the Samsaras in the business. We want to serve thousands of customers, hundreds of whom will be very, very successful, tens of whom will be absolute unicorns, and we get to grow in this very diversified manner. So bottom line, that end solution, that end fleet management solution, or that end connected health solution, it is our customer's job to market it and sell it and bill for it and so on and so forth, right? We're just making it work.
Sue Robertson says she's impressed by the reach and your demographics. Do you have a goal on when you think you'll be cash flow positive?
Yeah, well, what we do actually, and look, people look at me and, suspect that our guidance will be in the low 300s range for 2024 when it comes out, and wonder how I can say this, but we think we're set to be $1 billion revenue business. We've built the platform. We've invested everything we need to invest. In fact, for the last 5 years, we've been adjusting one-time investments against EBITDA. We're stopping that now because we're sort of set. And as you can imagine, the economies of scale are tremendous, right? So, we've gone from about 6 million connected connections or connected SIMs when I arrived 5-ish, 6-ish years ago to now closer to 20 million. As that 20 million SIMs grows to 100, there's not a whole lot of incremental cost. There's not a whole lot of incremental people. There will be some tech and some storage and some capacity kinds of things, right? And so we think the journey to profitability is very, very fast, especially as we stick our head in the flow of that explosion, to 75, 80 billion devices out there. But Paul, do you want to add anything about cash flow positivity on the model? I mean, cash flow positive we will be even in 2024, just because of the refi and as interest rates go down. We will be cash flow positive now. I was talking more about profitability. Cash flow positivity is now. So
yeah, I was just going to add that for this year with the refinancing and having that PIK interest option on the preferred will really help us from a cash flow perspective in 2024. Now, if things are better than what we had, we'll pay some of that down, but we do have that option in 24 and beyond now with the new refinancing.
And you've had some revenue headwinds for a couple of years, including the 4G conversions and legacy acquisition churn. Are those out of the model now?
Yeah, I mean, look, the vast majority of our volume historically, U.S. company, right? So we're have been in the U.S. and those 2G, 3G sunsets are done. And so while the rest of the world, some of our competition have their sunset issues ahead, we're sort of largely done. And where we do have a little bit of that left, it's well within sort of the norms of kind of regular churn. So we're basically go. And this is a really important point. So let me just spend another 30 seconds on it. We're a P times Q business in the CAS business, right? Price volume, right? Price has been going down, right? About 20% a year, not because there's price pressure, but because it's just cheaper in the long-term evolution in 4G land. It was much cheaper to get a meg plan or a 10 meg plan or a 100 meg plan or a gig plan, right? And so more expensive devices were coming off and much less expensive devices were coming on. We kept our profitability up because our cost was down as well. The whole cost environment had shifted, right? Well, for the first time in the last few quarters, we're actually seeing price go up. We've been growing volume at 26, 27% CAGR, giving away 20% of that at price. We look like we're not growing much because we're only 5, 6, 7% CAGR revenue. Well, with price actually starting to go up as higher and higher bandwidth applications are being used, as 5G comes in, price actually starts to go back up. As Q in a post-COVID, post-supply chain issue world goes anywhere near 20%, you're talking about a very, very exciting, potentially 20, 25, 30% type top line growth business. And we're not promising that for 2024, right? We're coming off of that. 24 maybe a 15 to 18% top line growth business a year. But all I'm saying is the possibilities now are even higher than that going forward because the constraints are behind us.
Thank you for that explanation. Dwayne wants you to clarify, do you own the network? Do you rent it? And will it for any reason ever need to be expanded?
Yeah, so back to my comment about off of the back of these heavy CapEx business models, the Verizons and AT&Ts build the networks, the satellite guys have to put birds in the sky and keep them up and all of that. Off of the backs of those guys, we've built our very light CapEx, right? Relatively very low CapEx business model. So the end network is not ours. We are stitching them together in the right way for you and your use case to optimally use on a quality of service and price basis.
Talk a little bit about why you bought Twilio IoT.
Yeah, that's a great question. We always stay paranoid, right? We're trying to build the absolute industry leader, and you can never get sort of, fully yourself that you're there. And one of the competitors that frankly scared me was Twilio, right? I mean, Twilio is a world-class company, and when they go about doing things, they do it right in a world-class way with world-class talent, and they were really building a fantastic multi-IMSI product called SuperSIM. So for us, we were delighted to be able to get that product and add it to our CAS suite of products. But even perhaps more importantly than just a product and the customers with those products are two factors. The talent that came with it, just fantastic. And by the way, born digital. And that's actually the second point. Twilio has the industry's best digital consumption model in what they do, right? So you can go into the console, the front end portal of Twilio, sign up to a bunch of services, and draw down multiple services all on a click of a button on a screen. And that was what we had to go build next at Core, was our digital consumption model. Well, we just got the world's best team at IoT consumption digitally that's going to help us build our console, and obviously just great talent in general. And then the very last thing I'll say in terms of strategic rationale for this deal, one of the things that Twilio incubated was in the build space. So for people that haven't spent a lot of money trying to build their own devices or spec it out and give it to a third party, you can use pretty much off the shelf devices quickly configured to a platform, and really speeds your time to market, right? And so pre-Twilio, we used to say we are a deploy, manage, scale company. Now we're a build, deploy, manage, scale company because of the acquisition.
Wonderful. Well, thank you so much. Do you have a quick closing remark for our viewers today?
Yeah, no, look, I would just say that I very much appreciate your attendance, your interest, your questions. I know it's a little bit of gobbledygook, and we're happy to do follow-up calls if I've confused you with my language. But very few times do you see an utterly, just sort of the babies being thrown out with the bathwater type scenario here. Of Core, coming public as a $10 stock and being at $1. There's no explanation for it, and we hope you'll see things that way after we've answered your questions. So thanks very much.
You sure did. We would love to follow you along with your journey. Join us again with some updates. Thank you, gentlemen.
Thank you, Anna.
Thank you. Thank you.
All right, stay with us. We'll be right back.